Welcome to our Managing Through Crisis Summer Series presented by Michigan State University's Broad College of Business. My name is Marcie Stowell. I'm an Assistant Director of Executive Development at MSU. Today we are discussing globalization post-pandemic. Dr. Ahmet will present his research and insights for the first 30 minutes, after which I'll share your questions with him. So please use the Q&A feature in Zoom to submit your questions throughout this presentation. I will share as many of those questions as time allows with Dr. Kirca. After we include today, we will provide you a link to a recording of this webinar, which will be available on the Broad YouTube channel, along with all the other webinars in this series. This is the last event in our Managing Through Crisis Summer Series. We have gotten connected with so many of you, and I'm already foreseeing that I will miss this weekly event with you. Based on that, and based on the feedback you've been so generously sharing throughout this series, we are developing a new, different offering focused on moving forward in our new normal. I welcome you to stay on this mailing list until we're able to communicate more details about that offering to you. Now, I would like to introduce Dr. David Freyer, the Assistant Dean of Outreach and Engagement for the Broad College of Business. Dr. Freyer, thank you for being here with us today, and thank you for your insights and guidance throughout this whole series.
Well, thank you very much, Marcie, and a giant thank you to you for taking the time to kind of visualize this series, to coordinate all of the faculty, to work so hard on creating a process that ensured these sessions would be just fantastic, and they have been. I'm grateful to you for all the work that you've done. I know everyone in the college is thankful and grateful to you for everything that you've done. I would like to extend my welcome on behalf of Dean Gupta and our entire Broad College team to all of you for joining us here one last time in this summer series. This has been an exciting opportunity for us to get to know all of you as we've weathered the pandemic that appears will be with us a while longer, but the opportunity for us to share insights from our faculty and to keep you connected to and aware of things that are happening here on the campus. It's been very, very important for us, and we hope you found great value in this opportunity. There are so many people, obviously, to thank for what we've done, from the faculty to the support staff to the team of professionals who's helped to put this series together. Again, just a debt of gratitude owed to all of them. And as Marcie's indicated, while on the one hand, this is an end of this particular series, we'd like to think of it as just a beginning of a deeper relationship with all of you. And we'd like to look for ways that we can support all of you in your personal and professional endeavors as you move forward. We will, as you know, continue to stay in touch with you about our existing series, whether it's Business and Bagels or some of our executive education and professional programs, our degree programs. We have many, many opportunities for you to further your own knowledge and insights. And as Marcie said, we're continuing to work on innovative new programs that will connect with the things that are being done here. So I'd like to also extend my thank you to all of you for taking time and being a part of this series. Your questions, your insights have been phenomenal and have really made this enjoyable for all of us. So thank you so much. I have the tremendous and distinct pleasure this afternoon of introducing Dr. Ahmet Kirca, who plays many roles in our college today. He is a professor of marketing and international business and has a tremendous research record and experience in the international space. And you're going to hear many of the insights that have come from his research and extensive experience. But more recently, he's been named the director of our International Business Center and cyber organization. We have a very extensive international organization presence with reach and federal funding and all sorts of tremendous work that is done by that center and the team of professionals. And we're very excited that Dr. Kirca is going to drive that organization forward, and we're looking forward to seeing some new and exciting opportunities from it. But again, I'm very pleased that you're here with us today, Ahmet. Thank you for taking time to join us. I think it's very appropriate that we end this series by talking about the global implications of COVID-19 and some of the things that have happened. And so I'm grateful and look forward to hearing your insights.
Well, thank you very much for the wonderful introduction. And thank you, Dave and Marcie, for coordinating and organizing this speaker series. As you indicated, you started with the impact of COVID-19 on the US economy. And we're concluding this series with the impact of this major event on globalization and what we expect in the post-pandemic world. So today I will share some data that demonstrate the impact of COVID-19 pandemic on international business activity, specifically on international trade, foreign direct investment activities, and my views on how globalization pressures will remain enduring features of the business environment in the post-pandemic world. Well, clearly, in the last 6 months or so, businesses globally have experienced unprecedented and dramatic changes. And we actually still do not know the extent of the impact of this pandemic on global business activity, as the numbers have started to climb up again in the last few weeks, especially in the US, but also in other parts of the world, as fall and winter seasons push more people indoors. So in this webinar, I will first present some interesting statistics that show the immediate impacts of COVID-19 on international trade and foreign direct investment, as well as the supply chain disruptions that are taking place globally at this point. And then I will conclude my talk with my views about the future of globalization once we are over this pandemic. Well, first let me go back to this slide and show you the big picture. This is unfortunately, a slide that shows the significance of this global problem. This is a map that shows that hotspots, countries that are hit hardest around the world at this point, as of last night. I just updated this document last night, and I downloaded this map from New York Times. And as you can see, US, several countries in South America, France and Spain are among the countries that are experiencing really high rates of infections, while others appear to have mostly controlled the virus, but there are also some other issues with some of those locations. So, but this number is really important. We are at 33.2 million with the total number of cases. And unfortunately, the number of new cases is growing faster than ever worldwide, with more than 200,000 new cases reported each day on average. So I know this is going to sound pessimistic, but that is the hard reality, and we're not out of the woods yet. So this is a major global crisis for businesses, domestic or international. This is a major global crisis because of the sheer number of people who are affected by this pandemic. I mean, that's clearly a human tragedy that will have long-lasting political, economic, even cultural impacts in the next decade or so. In a nutshell, the significance of this global crisis can be shown with a simple comparison. I mean, COVID-19 induced 2020 global recession is expected to be the worst since the Great Depression in 1930s in the US and in much of the rest of the world. So from a business perspective, the pandemic created both a supply side and demand side shock. In addition, this happened during a period of fast population growth in large metropolitan areas in the past 30 years or so, and under liberal fiscal policies in the last 10 years that enabled the rise of middle-class consumption everywhere in the world. So these low interest rate regimes and heavy fiscal stimulus around the world, not only in the US, before the pandemic, and I'm not talking about those fiscal stimulus packages that came after the stimulus that further increased, but that was just to deal with that particular problem. There were fiscal stimulus, heavy fiscal stimulus, and a lot of cash floating around in the global economy because of the low interest rates. And that increased mobility, travel, consumption, and interconnectivity. So in turn, these factors further facilitated the spread of the virus globally. So unfortunately, all of this happened when the necessity and legitimacy of global organizations and institutions like World Health Organization, United Nations, NATO, or even European Union have been questioned in the middle of a trade war between the US and China. So this actually further created significant problems, coordination problems globally. So that's the context. That's the period in which these events took place. So this is a demand side shock, because due to COVID-19 pandemic, consumer spending plunged along with the gross domestic product. So global economy is expected to contract by about 4.7% in 2020 if a second wave of the pandemic is avoided and economies gradually reopen. If that happens, then we're going to have 4.7. Otherwise, well, there are wild estimations there. Nevertheless, as you can see in this graph, the economic impact of the pandemic will be uneven. So advanced economies are going to be hit hardest, while emerging economies are going to plunge into a recession. So Eurozone, obviously, as with 9.4% contraction, is going to be hit the hardest. And that's partly because advanced economies depend much more heavily on services. And this pandemic affected the service industries much more than the manufacturing. So as you can see in this graph, in the next graph actually, well, services have been, the impact of the pandemic varies by industry. And the most impacted industries are full service restaurants, temporary help services, accommodation, entertainment, etc. And clearly, advanced economies rely more heavily on services. So the unemployment rates are expected to stay at high levels until the global economy starts to recover in the second half of 2021. As long as we do not have a major second wave of the pandemic. So that's another reason why that's a demand side shock. So let's now jump into some more specific statistics about international trade. This graph shows how COVID-19 pandemic crashed the global economy. World trade in particular, which essentially captures all export and import transactions between countries. So the international trade actually fell sharply in the first half of the year. So the red line that you see here is actually is not the actual number, but that was a prediction of the World Trade Organization as of the end of April. But once the second quarter numbers were released, we know that we actually are following the green line. So the overall situation is not as bad as we had predicted, or they had predicted initially. So initial estimates for the second quarter indicate a year-on-year drop of around 18.5%. And this decline is large, but could have been much worse. So, however, looking ahead to 2021, I mean, the picture is not really that clear because we don't really know if we're going to have a second wave, and we don't know. We might have weaker than expected economic growth. So, and also there's the threat of widespread recourse to trade restrictions. Therefore, the trade expansion might fall short of earlier projections. But the good news is that the pessimistic scenario appears less likely, the red line, since it implied sharper declines in the first and second quarters. But certainly policy decisions have been critical in softening the ongoing blow to output and trade. And these policy decisions will continue to play an important role in determining the pace of the economic recovery. So let's look at some other statistics, interesting statistics. This one shows the global commercial flights per day and the drop. So from January to April, the amount of international air cargo were down nearly 3/4, as you can see right here, about 74%. But then, since then, it jumped about 58% through mid-June. So from the bottom to mid-June, it's a jump of 58%. But of course, we are far off the peak levels before the pandemic. Another interesting statistic is about the global container throughput. These are important indicators of international trade activity. And container port throughput also appears to have staged a partial recovery in June compared to May. So things, in brief, based on international trade statistics, it seems like there's some hope of recovery, and things are going a little better under the optimistic scenario in which we do not have a major second outbreak this winter. So let's now turn our attention to global foreign direct investment flows. Unfortunately, the foreign direct investment picture is not very promising, as illustrated in this figure. I mean, here you can see that the global FDI flows between 2015 and 2019 up until here, and then from 19 to the projections until 22. First of all, as you can see from the wide green line, the predictions are highly uncertain. We don't really know exactly which way this is going to go. And I've been following these global FDI flows, and I've never seen such a large range. I mean, this basically, as of 21, it can be below $1 trillion. And it can be, I mean, almost like $600 billion foreign direct investment flows. So these are actual flows, up to 1.5. So that's a huge variation, as you can see. And that just indicates that we don't really know exactly what's going to happen as a result of this pandemic. And from $600 billion to 1.5 billion, I mean, that's almost like triple of the lowest numbers. So the lower bound of the forecast indicates that we might expect further stagnation in 2021-22, and that will actually leave the value of global FDI well below the 2019 levels. And actually, the worst story here is, I mean, if we look at 2021, about $1 trillion, that's below the levels of 2005. So that's how far back we're going with foreign direct investment flows because of the impact of this important event. So here are some trends and prospects in regard to FDI. I mean, COVID-19 crisis will cause a dramatic fall in FDI, as I've just demonstrated or shown in that graph, in the previous graph. Global FDI flows are forecast to decrease by up to 40% in 2020. And that would bring the FDI levels below $1 trillion for the first time since 2005. The outlook is highly uncertain, and geopolitical and financial risks and continuing trade tensions add to the uncertainty. The pandemic is a supply, demand, and policy shock, actually. I just mentioned the supply-demand side, but it's a policy shock because policy measures taken by governments include new investment restrictions. So coupled with international trade restrictions, i.e., for example, the trade war between US and China and several others in other parts of the world, and FDI restrictions is going to make the global investment or global business climate very hard to operate in. The lockdown measures are slowing down existing global business activity, foreign direct investments or international trade. So there are about roughly 5,000 MNEs, multinational enterprises worldwide, which account for most of the global FDI, and their expected earnings are going to drop. They are revised down by 40% on average. And here's another bad statistic: 50% of new greenfield investments and cross-border mergers and acquisitions are not going to take place in the first. That's the prediction, and the impact of this COVID-19 on foreign direct investment varies by region. So developing economies are expected to see the biggest fall in FDI, which is just the reverse of GDP, as you would remember, and that's really going to affect, in the long run, what's going on in the emerging economies, and that's going to create further problems, more problems down the road. So the question is, well, are the global value chains are disrupted? The answer is yes, at least temporarily, because both on the international trade and FDI side, COVID-19 pandemic caused a major havoc in the global economy, and global value chains are disrupted to a certain extent. As I mentioned earlier, policy measures taken by governments include new investment and trade restrictions, and that makes life even more difficult for multinational enterprises who would like to streamline their global supply chains. Therefore, we are likely to see more disruptions in the near future before global supply chains can flourish again. In particular, in industries like medical supplies, pharmaceuticals, we expect to see much shorter supply chains. That means instead of sourcing from foreign locations, many pharmaceuticals, food, and it's another industry, critical industry for human well-being in general, especially during the pandemics, as we have seen in the recent months. Those are going to be affected by these disruptions a lot more than others. And overall, some industries, service industries in particular, airlines, restaurants, bars, even education. They're going to be affected heavily because, and their supply chains are going to be affected heavily because of lower demand in general in the next few years. So this is a major crisis. To sum up, this is a major crisis because we have tight coupling within and across regions with respect to trade integration. So up until the pandemic hit, the globalization was in progress. So we're integrating through trade and foreign direct investment with the rest of the world. The world was becoming a more coordinated and integrated marketplace. Because of portfolio and direct investments, because of global value chains and travel, leisure, business, education. So that's what we call the tight coupling within and across regions. So integration and coordination, that's a global world, the globalization, right? And yet, we had not created laws, regulations, norms, and values, and common global policies. So that's why the world was loosely coupled. And that's exactly why this is a major crisis, because of the response that varies across regions, across different countries, and yet this is a global problem. This is a global pandemic. And in my opinion, and that's my view about globalization, and that's what I'm going to conclude with, a global pandemic requires a global solution. This crisis shall pass, but we need better response next time, that's for sure. So far, we have about 1 million deaths, and we're not at the end of it. So we need to learn from this experience, because this is not the last pandemic or major global crisis. So if we define globalization as economic coordination and integration of activities across the globe, the statistics that I provided during my talk indicate that globalization took a major hit in the past 6 months or so, and globalization is in retreat. So the big question is, will the COVID-19 pandemic leave us with the last globalized world? Will it fundamentally change how companies do business across borders? These questions are very critical, and they've been very critical since the very first days of the pandemic, with rising doubts about the future of globalization in the aftermath of COVID-19. I'm an optimist, and I believe that the reality is that the pandemic represents both a threat and an opportunity for globalization. So in my opinion, we need more integration coupled with stronger global institutions, because this approach will help us develop and coordinate a more effective global response to solve global problems. So I hope this pandemic has taught us that if we do not have an efficient response to global problems, our children will have to deal with more catastrophic global crisis in the future. So the bottom line for me is stronger global organizations and institutions are needed to develop and coordinate an effective global response to solve global problems like the pandemic that we are dealing with. So I will conclude here and see if you have any questions, if there's anything I need to clarify, because I went through a lot, I know, especially with the graphs and numbers and everything. Yeah, please let me know if there's any clarification or anything you want to know more about.
Thank you very much. You did go through a lot. There was much to think about and digest as you were doing that. And we're seeing that reflected in the questions from those of the people that are viewing us today. So I want to start with a couple of questions about America and China, and then we'll move into a couple of questions about the vaccine or a potential vaccine for coronavirus. So my first question is about America and China. Made in America has become a big slogan for both political parties in America. Do you see changes for many organizations that have in recent years outsourced much of their manufacturing to overseas countries such as China?
Well, I think yes, but at the same time, we have to realize that international trade takes place because of efficiencies. And at some point, customers will ask for those types of efficiencies. I mean, if you have a dollar store, or if you can buy certain things for a t-shirt for less than $10, and if you want to manufacture that in the US, are you going to be able to manufacture it for $10 or not? And what is going to be the impact of selling that for your profits, for your bottom line, for customer satisfaction, and all sorts of other issues that we care about if you decide to sell it for $20? Yes, certain groups, certain people, segments of the customer segments will be happy to pay a few more dollars, maybe 30% more, 40% more. But the issue is, the reason global supply chains exist and the reason international trade exists is efficiency. And if you take the efficiency out there, and if you start to grow bananas in Michigan, they're going to be expensive, I'm telling you. So I think that's the fundamental problem. And how comfortable are we going to be paying not 99 cents, but $9.99 for bananas if we decide to grow them in Michigan?
China has made a lot of investments globally in recent years. We spoke about that last week when we had a presentation on artificial intelligence and their both spending and their projected spending. And they're investing in many things globally. Do you believe this will continue, and what might be the possible impacts?
For Chinese foreign direct investment? I'm sorry,
Correct.
I missed the first part.
Yes.
Yeah. So I think this is a big global rivalry going on over the last 10, 15 years. I think there are a couple of areas of concern politically and economically, and one of them is definitely foreign direct investment from China that's influencing political decisions in certain parts of the world. And I think that rivalry is going to continue for the foreseeable future between the US, China, and the rest of the world. And the second domain where we're going to see more debates, and that's part of the international trade discussions, and that's where the international trade discussions or this international trade war makes a little bit more sense from my perspective, is the intellectual property right issues. So I think, I'm not sure if that's the best way to go after China and try to kind of convince China that they have to pay attention to intellectual property rights. But China entered the World Trade Organization with very little concessions. And we have to admit the fact that, well, there are serious intellectual property violations in China that bothers US multinational companies, and something needs to be done about those. And international trade restrictions, all these tariffs, I'm not really sure if that's really the best way to go, policy decision, but still the problem is there. And I think Chinese foreign direct investment is going to be instrumental for the Chinese government to address some of those issues, because at the end of the day, they will exploit those intellectual property rights in other locations other than China, and that would divert the attention politically and economically. So I think those issues, those questions they're all very closely interrelated.
Let's shift into talking about a vaccine. Would a vaccine developed and implemented worldwide lead to a quicker and faster global economic recovery? And if so, how quickly would the economic recovery be with a world vaccine?
Well, I think from what I read over the last 2-3 months about the impact of COVID-19 pandemic on international trade and foreign direct investment, I've learned that there are lots of alternative scenarios. And the worst case scenario actually projects that the GDP growth, 2021 is going to be lost, and we're just going to start the recovery. We're going to start seeing the recovery not before 2022. And that worst case scenario assumes that we're not going to be able to find an effective solution to this problem. And that's a vaccine or an effective treatment. You can get sick, but if you do have a good treatment, then it acts as the vaccine too, right? So if we don't have, if we have a second wave, and or we do not solve this problem at the beginning of, until the end of this year or at the beginning of next year as predicted. In other words, if we don't have a vaccine, I think this situation is going to continue, and we're going to see the impact of this much more heavily on international trade. As I've shown in my slides, international trade is really not as bad as some think. Foreign direct investment is in bad shape, and I'm not really sure, even if we find a vaccine, foreign direct investment flows are going to improve anytime soon, because there are a lot of other issues there. And it's been going on. I mean, the decline in foreign direct investment has been accelerated because of the pandemic, but the foreign direct investments were declining starting from 2015-16. So they never went back to the levels we had in 2005 or 6, before the big financial crisis we had in 2007 or 8. So foreign direct investment, there are risk issues, there are perceptions, there are managerial decision-making processes that affect foreign direct investment. And then of course, lots of policies. And the retreat in globalization, those kinds of issues affect foreign direct investment more than international trade. But yeah, I mean, the short answer to your question is, even if we find a cure for this pandemic in the form of a medicine or a vaccine, foreign direct investment is probably going to decline a little bit more, but international trade can recover a lot faster.
And one more question on COVID before we move on to a few more questions about other countries. Since the rate of death has declined, why do you think there's a focus on cases rather than deaths? The deaths seem to be dependent on age-related cases. Shouldn't we see cases stratified by age? Do you believe it's deaths that impact the economy more than just cases?
Well, I mean, I'm really not an epidemiologist, so I would skip that question because I'm not really sure how they directly impact international trade and foreign direct investment and globalization. But I mean, as I demonstrated at the beginning, so as I demonstrated here, I think it affects the perceptions. Basically, the numbers, the number of cases in and of itself affect when you see 33 million, or when you see all these dark red areas all around the world. I mean, that affects the consumption patterns. And that's the demand side shock that I was talking about. That affects the GDP growth, that affects consumption behavior at the aggregate levels. And I think if you decide to break it down and focus on some other parts, at the end of the day, 1 million is 1 million deaths. I mean, 200,000 in the US is a huge number, whichever way you look at it. So, I mean, that's going to be scary. Even if you feel like, yeah, when you are 60 years old, you are much more likely to die than when you are 15. But that doesn't make me really comfortable, because I'm going to be there in a couple of years, or for 50s, that's the same thing, right? So that doesn't make me more comfortable, and doesn't make me feel like I should go and dine and travel and go visit Italy and Spain and everywhere else, right? So I think as long as we solve this health problem, we're gonna be in this mess for a while.
Thank you for tackling that question.
I still tackled though, right?
Yes, you did, yes. So let's go back to what you're more comfortable or familiar with based on what I know. Do you think Asian countries with less infection rates or countries with less infection rates will have less impact on their economies compared to countries with higher infection rates, such as the US?
Well, I think domestically they're going to be able to solve the problem a little bit faster, but I think the world is so integrated, and that's the tight coupling that I referred to here. I'm just going through these slides very quickly, but remember, I used the word tight coupling, and that's why this is a major crisis. That's why this is a big problem, because on one hand, we have all these flows, trade, integration. The world is interdependent. We live in a semi-global world, as some would call it. It's not a global world, and it's not a flat world. I mean, it's not a flat world or global world, or it's a spiky world we live in. There are differences and similarities, and that's why we need managers to deal with these risks. But we are now in a situation where there's trade integration, there's a lot of travel, leisure, business, education, there's so much interdependence, global value chains, and so on. And yet, there are regional and local laws and regulations, norms and values, and no common global policies when it comes to dealing with global problems. So going back to your question, I think Asian countries, even if they manage to lower the numbers, if we don't approach this problem from a global perspective and lower the numbers all around the world, how long are you going to be able to protect yourself with no travel? Or how long are you going to be able to protect yourself in this integrated world? I mean, those numbers are going to go up eventually. We're not going to solve the problem. And that's why I was trying to say here that, well, a global pandemic requires a global solution. Regional solutions, suboptimal solutions are not really going to help us much as long as we don't solve the problem everywhere equally, because this is a pandemic, it spreads.
Yeah. So this next question is from Rick. He's asking about the impact of work from home or work from anywhere. Do you think companies will change how they do business in the private and public sectors to reinvent how we are working from home, utilizing technology, cutting costs of building expenses, etc.?
I think they will. We saw that from our own experiences, and I feel very comfortable teaching from class or giving webinars from home. And I actually think that this is pretty cool. And there are situations where I can use this technology, and others where I would really like to be in person interacting with people. And that's the same thing for businesses. Of course, this use of technology will vary across industries. In education, well, basically that's a knowledge-based industry where we transfer knowledge, and we can be in the classroom or 10,000 miles from each other using Zoom to transfer that knowledge, as long as we know what we're talking about and we have slides and we have that technology. That should be okay, right? But some other industries are not. I mean, that's just not going to be possible in other industries. But I think that raises an important issue about the inequality. I mean, globally, the inequality is a huge problem, and this pandemic is going to make even more difficult from that perspective. You're going to have a much bigger number of people who have this technology, you know, more developed economies. And in those developed economies, you're going to see industries transforming themselves, businesses transforming themselves much faster than the others. And as you can see, people are talking about K-shaped recovery. Some firms, well, are much better in shape than they were before the pandemic hit, and others are still struggling big time. So I think that inequality in and of itself is going to create bigger problems. And globally, not only in the US, again, that's my opinion, but I think governments will have to tackle that inequality problem a lot more effectively with actual fiscal policies. And we'll see how that will play out in the US. That would be really interesting to see how that will play out in the US, because, I mean, there's $2 trillion fiscal stimulus out there. And I mean, that's been people were getting checks directly from the government, right? So, I mean, it doesn't get more equalitarian than you can see in some other countries, but that will continue to be the case because of this use of technology and how technology is changing our lives and how COVID-19 is impacting different groups of people differently in different parts of the world.
You mentioned education with a global perspective. How do you see that changing, or what do you predict will change in that arena?
Well, education is a face. I mean, you can deliver education in different modes, obviously, but traditionally in higher ed, we have a particular model, a structure, a particular model, on-campus education, face-to-face interactions, very high context model where faculty and students interact with each other in projects, in lectures, and students enjoy campus life and so on. And US higher ed benefited substantially from the quality of education it provides and this experience that it gives. But unfortunately, this pandemic, COVID-19, has already changed it. I mean, we can see that our numbers, Dean, just this morning, Sanjay Gupta, I was in another meeting with our international advisory board, and he reported that our international student body is much smaller than it used to be. I mean, we're relying much more heavily on domestic students than international students. I mean, that's just a marketing problem from my view. It's a different segment that you are serving, or a particular segment that you were serving traditionally is shrinking substantially after this big exogenous shock. So I think this is really going to have very significant impact on the US higher ed, as well as other institutions in other parts of the world. So I think that's going to be the biggest impact of COVID-19. Mm-hmm. And another important issue I think is going to be related to the fact that well, these protectionist measures that we're going to see imposed as a result of COVID-19 are going to have might have long-lasting impacts. So this deglobalization, or the globalization in retreat at individual level. I mean, at individual level, globalization was not really at very high levels anyway. I mean, it wasn't really as much as financial flows or international trade flows or foreign direct investment flows, but still people could move from one location to the other to a certain degree somewhat freely. I think these restrictions, travel restrictions, and all these concerns about health issues, and one country dealing with the pandemic much more successfully than others, and lowering the number of infections and so on. These are all going to have impacts on, are going to have important policy implications. And that's going to affect travel and how education is going to be really an important aspect of that equation.
This next question is an interesting opinion concerning global expansion and timing. With the rise in nationalist expression globally that you spoke of, is it more advantageous for a largely domestic US-based enterprise to consider global expansion today in order to have a presence around the world? If so, how best do we manage this? Organic growth or global acquisition?
Well, I mean, I would say that in the past 6 months or so, I would personally not make any decisions about further global expansion because we really do not know much about the implications of this pandemic. I mean, I've just shown you this particular slide about foreign direct investment. So this one, so expansion well, global expansion involves using a particular mode of entry that could be transactions, and that would create international trade, right? Because you are located in another country market and you are trading, buying and selling, or well, you do foreign direct investment. And if you look at the foreign direct investment numbers here, projections, you see a lot of variation. So that just basically means that we don't really know what's going to happen. There's a lot of uncertainty there at this point. So a lot of companies have already put a hold on their international expansion decisions at this point to see the actual implications of COVID-19, at least in the 6 months or so. And then they're going to move forward, depending on the circumstances as a result of their assessments in 6 months or a year from today. So I think, yes, that might provide some advantages, but I know the risks seem to outweigh the advantages at this point in time. In 6 months or a year, I think the picture might be a lot more clear, and it might make more sense to commit to a particular country market.
Skipping around a little bit, that's how the questions come in sometimes. So this next question is on cross-country collaboration and the impact of the United States withdrawal from the WHO. You talked about cross-country partnerships or collaboration in dealing with the impacts of pandemics. What do you foresee will be the result of the US pulling out of organizations like the World Health Organization?
Well, I mean, US has always been a leader in the formation and development of these types of organizations. So the short answer to that question is loose coupling. Unfortunately, that would just create more loose coupling with respect to common global policies. And if a powerful country with a lot of resources decides to pull out from a global institution like World Health Organization, that will only make that global response more difficult to organize, because US in and of itself, despite its resources and power, political and economic power, is not going to be able to handle this global problem alone in other parts of the world, not alone in the US, as we can see, but as you can see in other parts. I mean, it's just going to be impossible for US to solve that problem on a global scale without the support of these global institutions. So the fact that US pulls out from those institutions is just going to create weaker global organizations and institutions that are needed to develop and coordinate an effective global response to solve this global problem. So that really is not very helpful, in my opinion.
And on that topic of tight and loose coupling, this is a related question. As trade across all sectors and industries are becoming more global or are global, do you feel there's a particular segment of the economy that can lead this process of building a solution?
You mean a particular segment or industry that would lead the solution to the global pandemic problem?
Yes, correct.
Well, I mean, the superiority of US pharmaceutical and medical industry is undisputable. I think that's one area where US can really lead. But I think US can also lead on the policy front. I mean, as we have done after the Second World War, as we have done in various regional conflicts, and as we have done in other major pandemics in the past, I think US should take a leadership role in addressing these global problems. And it should definitely use its valuable assets, strengths in some specific industries like pharmaceuticals, medical equipment, and even military. I mean, I think this is the type of effort that we really need to kind of make available for in the US and in the rest of the world to be able to solve this problem. This is a very strong enemy that we are dealing with that just kept billions of people in their homes in the past 6 months or so and took more than 1 million lives around the globe. So I think US should really take that leadership role using its assets that would definitely help its own citizens as well as the rest of the world.
Thank you. You actually answered my next question. You gave us some examples of potential collaboration. So let's move on. I have 2 more questions for you, and then I'd like to give you some time to share your final thoughts. Some believe that the European Union can only survive on overseas trade. Do you see closer ties with the EU and the Americas in the future?
Some see, I'm sorry, can you repeat? Can you just, yeah, I didn't understand that part.
Some believe that the European Union can only survive on overseas trade.
Trade?
Trade, yeah. Do you see closer ties between the EU and the Americas in the future?
I mean, if you look at the history, European Union actually was formed to solve as a solution to the problem that brought Europe to the brink and to the Second World War. So trade is part of the equation, but it doesn't necessarily, it is not necessarily the only element that keeps European Union together. And yet, European Union has become a much powerful trade partner because of the integration. I think there's a potential, yes. The short answer is definitely yes. But of course, European Union has a long way to go before strengthening its core to be able to provide a unified response when it comes to these major international disputes or issues that govern the relationships between European Union and the rest of the world, and US and the rest of the world, and countries within the rest of the world. So in short, European Union still needs to, I mean, it's going to be a very simplistic language, but bring its act together to be able to serve that role or play that role effectively. And unfortunately, there are way too many things going on in the European Union now to be able to accomplish that. And as you have seen, I mean, let me show one other statistic that our audience might have missed. This is the GDP growth statistic I showed here. Eurozone is going to suffer the most from COVID-19 pandemic in the next couple of years. I mean, Eurozone was not really in great shape entering the pandemic or this major crisis. And some countries like Italy and Spain had huge unemployment rates even before the pandemic, up to 15–20%. And that's going to make, I mean, this pandemic made life even more difficult. And even with enormous stimulus money that European Central Bank is pushing out to the members of the Eurozone, we will see if European Union is going to be able to even survive this major crisis. We are in the midst of it now. It's really hard to see what the implications might be, and there are some speculations about how the core central bank of Europe is going to have such a hard time addressing this high debt issue, unemployment issue, and all the economic problems created because of the picture that you see in this particular slide. I mean, 10% GDP growth for 2020, and that's the best case scenario. In 21, it's 5%, but it takes certain, I mean, there are certain assumptions behind those numbers, and they are really optimistic scenarios. So the answer is yes, but in a perfect world, and we're not in a perfect world now.
We are not, yeah. You have left us wanting more. I think it's so often when we listen to you, we have run right up to 2 o'clock today. So I wanted to thank you for taking the time to work with us to pull this together and for sharing your thoughts and insights today with us and with those that are watching. And for those of you that are watching, we appreciate you collaborating with us. With you, we appreciate you coming every week to this series, and we will miss you. We hope that we can engage with you in other media as we move on into the rest of this year and into 2021. So take care, thank you, and we wish you well.
Thank you very much for inviting me to this wonderful webinar series. Thank you.